Starts today. Banks reject Fed cuts. Bad for silver. Reuters tells us that Fed's Bostic scales back to single rate cut on inflation concerns. Now, that name Bostic isn't necessarily a household name for us, but he's Atlanta Federal Reserve Bank president. His last name's Bostic. And he said on Friday, he now expects just a single quarter point interest rate cut this year instead of the two he had projected. He's citing persistent inflation. Yes, he's not the only one. He's citing persistent inflation and stronger than anticipated economic data. Now, this is frightening for us as silver stackers in our silver stacking community, because any flip-flopping in terms of this rate cut that we're hoping to see, these three rate cuts throughout 2024, can easily give the Fed an excuse to do just that, flip-flop. Of course, we're all excited with Switzerland's move this week. Switzerland took the lead and cut their interest rate, and hopefully that's what we want to see. We want to see these cuts go down, especially as silver stackers, especially for those of us who have been waiting for this metal that I'm holding in my hand, waiting for it to go up in value. That's exactly what we need. We need a low interest rate. When the rates drop low, that is the correlation between interest rates and silver. When the rates drop low, people pull out of treasuries, they pull out of the dollar, and they go into precious metals. And that is what gives us that bump, that boost in price that we've been waiting for almost 2 full years now. We've just been hovering. This silver has been hovering between $22, $24 for for 2 years. Not this expensive silver that I'm holding. This is semi-numismatic silver, but rounds like this, generic silver like this, it's been like $22 to $24 for a long time. So this article continues. It says, I'm definitely less confident than I was in December that inflation will continue to fall towards the Fed's 2% target. Bostic told reporters after a forum. Price pressure concerns led him to scale back this year's rate cut outlook and push back the likely start date, he added. Now, the elephant in the room with the conversation with any regional bank president is that these bank loans are maturing this year. And those loans are at the forefront of every regional bank, because commercial real estate, this huge issue with commercial real estate is tied to those loans. They're all coming to mature, and that is going to impact every regional bank. Now, we've seen this past week that Wall Street is trying their best to play the game that they played in 2008 and 2009 by bundling all of this in with some other healthy loans, right? But that's what we did in 2008, 2009, and we saw how that played out. So that is really what's going on in the minds of these regional banks. So let's keep going. It says, Bostic had previously said rate reductions might start as soon as the summer. Everybody's looking at June. Everyone's looking at June for rate cuts. The Fed is widely expected to reduce rates beginning in June. Bostic said the economy has proved more resilient than anticipated, with recent data causing him to roughly double his 2024 U.S. economic growth estimate to 2%. He saw little or no change in the current 3.9% unemployment rate, a level considered inflationary not too long ago. And it says, while he feels inflation is on an arc lower, it may be moving slower, and he cited concern about the number of items still recording outside price increases. So, as we look at inflation and this interest rate, it makes everyone start to bite their nails, because ideally the inflation of pay will increase, and that will give people more money to buy products, and the entire economy will be lifted, ideally. But there's this balance that always has to take place between the rate of inflation and the interest rate. It's this inverse relationship that they have. And that's why we're so excited to see that Switzerland has really pulled the trigger and been the first to go ahead and lower interest rates, even though Switzerland noted that when they did this, when they decided to lower their rates, I think it was yesterday or the day before, they absolutely are concerned about the correlation between unemployment and inflation and inflationary wages. That's what they call it, inflationary wages, which just really means workers getting an increase in pay. This is Reuters again. This is another article this is by Herbert Lash and Amanda Cooper. Reuters says dollar strengthens after big shift in global rate outlook. Now, that strengthening dollar is something that we're always looking at as silver stackers. We're always looking at the value of the dollar. And interestingly, the dollar really kind of roller coaster the past couple of weeks. So to see that Reuters is noting a strengthening dollar, let's look at what it says. It says the dollar headed toward a second week of gains on Friday after a slight rate hike in Japan gave the yen a slight reprieve and a surprise cut in Switzerland. As Switzerland highlighted the gap in interest rate policy, making their central bank decision to lower their rate. The week marked a shift in global monetary policy as the Swiss National Bank and central banks in developing countries cut rates or indicated their intention to do so, with June likely the moment for the European Central Bank to move. I would be really surprised and excited to see if the European Central Bank follows the Swiss National Bank before the U.S. and makes these cuts, because that's the reverse of how we got into this situation. The U.S. was taking the lead in raising rates, and everyone was following. All the Western nations were following the U.S. So if the European Central Bank makes its move before the U.S. and follows the Swiss National Bank, I feel confident. Again, I'm not a financial advisor. I'm not even an economic analyst. I'm just a regular guy like you. I stack silver, and I'm very interested in learning about these things. I'm just a regular guy. But to me, that tells me that the U.S. will have a stronger case to likewise follow those countries, follow them, and cut our interest rates. This past week, we saw reports of mortgage rates for first-time homebuyers, 30-year mortgage rates going as high as 7% for a 30-year mortgage. 7%. Oh my God. For those of us who have a mortgage and who have lived through that process of getting a mortgage when you're a first-time homebuyer, to think that that's your option, that's not only going to be painful for any young person who's buying a home for the first time, but it's also painful for the entire market. The spring is here, and well, it's coming, right? We're basically in spring, and this is supposed to be the real estate moment. Like this is what the real estate market waits for. So we have this massive 7% mortgage rate combined with the commercial real estate issue that is coming to explode in our face within the next months as 2024 plays out and 2025 comes in. Those commercial real estate loans are all maturing, and they're all going to hit at the same time. Those regional banks are going to be shaken down, and people are going to be having to turn to credit cards because they cannot take out loans. That's the whole point of these regional banks, is they're there to support your entrepreneurs, first-time businesses, people that need a loan from a regional bank. You take away those regional banks, and that opportunity to get that cash, to get those loans, that's gone. People turn to credit cards, as they already are turning to credit. So this, again, is why I, as a silver stacker, as just a regular guy that spent years stacking silver, this is why I always feel secure, and I'm still bullish on silver. By the way, if you like these videos, these live streams, please hit subscribe and hit that like button. That always helps get this information out there to people. That's why I'm so bullish on silver, because I look at all of this, waiting for the higher ups to make decisions on interest rates, biting our nails as these commercial real estate loans come to fruition and cause a shakedown of regional banks, all of that, those things that are out of my hands, I like to hold my wealth in my hands. And that's why I always have been into this. I've always been into stacking silver. And I still am, even though the past 2 years has been frustrating with a stagnant silver price. I see that I see that the changes coming are good news for silver to finally start to make the move that we've been waiting for all this